A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be starting afresh with a new indicator, Keltner channel. This is the indicator which you can utilize to look at the volatility as well as the direction of the trend. So it works both ways, and it's quite a great tool to try to optimize the entry and exit for a profitable trading system. So we will see how we can utilize this for our algorithm. This is the JForex platform, and I have plotted the Keltner channel on the chart of USD JPY with the candle period of 4 hours. We have this channel which is derived using the combination of the EMA and the ATR. This EMA is used as the middle band, and these two bands, the higher band and the lower band, which you are seeing, which go on to form the channel, are formed after adding and dividing the ATR range for this chart. And I will not go into the technical details of how the Keltner channel is calculated, but we will consider its utility. We will more focus more on the functional aspects of it. So the setup is going to be quite simple. We are utilizing this Keltner channel to give us the direction of the trend. So for that, we are utilizing a simple setup. We will be considering the current output of the middle band, middle channel of the Keltner channel, and compare it to the output value 6 candle period of 4 hours back. So that will give us the data for the Keltner channel's middle band a day back. So we have to compare this. If the current value of the middle channel is higher compared to the value a day back, then we will be looking for the initiation of the buy trade. If we see that the current value of the Keltner channel is low compared to the value of the middle channel a day back, then we will be considering the sell trade. So that setup is going to be quite simple. And one more thing we will add is that the current output value, or we can even take the last 4 hourly candle close, should be within this channel, because in one interpretation it is also considered that if we have the price action above or below this channel, that also shows the overbought and the oversold scenario respectively. So to avoid getting involved when there has been quite a good movement already, we will be adding this condition. And once the 4 hour conditions have been satisfied, we will shift our focus to the 15-minute candle period. Here the combination is going to be quite simple. We want to look at the price volatility of the last 15-minute candle period, and for that, what we will do, we will need, for any buy trade to be initiated, the last 15-minute candle close should have been higher compared to the upper channel, and we will also need this channel to be on the rise. So we will take both these values, the price action data as well as the Keltner channel formation. We will compare the current value or the last 15 minutes Keltner channel middle band value to the value 1 hour back. So we will be considering the 4 as our shift value for determining the Keltner channel's value 1 hour back, and with that look back period we will have the data with the time interval of 1 hour. So for any buy trade to be initiated, we need the Keltner channel to be on the rise, and also the last 15-minute candle should have closed above the Keltner channel, and whatever is the value of the middle band, that will be our initiation point for the trade. We will use a pending open order, and we will utilize this output value of the middle channel as our entry point. For a sell trade, the formation is going to be simply inverted. We will need the Keltner channel to be in decline, and the last 15-minute candle should have closed below the lower channel, the output value of the lower channel, and whatever is the value of the middle channel, that will be our initiation point to go for a sell trade. And here also we will be comparing the Keltner channel's middle band value to the value 1 hour back, and it should be in decline. So this is the condition for the execution of the trade. So now we head to the Visual JForex board, where we will have to define the structure in such a way that trade execution happens as per our logical requirement. This is the Keltner channel's indicator block. We have to define these 4 parameters, depending on which we will get these 3 output values: the upper band, middle band, and the lower band. The default candle period is 10, and candle periods is of 10 minutes here, but we are going to work with a different combination, so I will have to change this. We are going to need 4 Keltner channel blocks, 2 of 4 hourly candle period, and 2 more of 15 minutes each. Prior to adding these blocks, we will have to get the instrument subscription done. For that, I will take the help of logical blocks. If blocks, okay. Here we will have to take the default instrument. Default variable, default instrument. I will change this to USD JPY. This time around we will work with the USD JPY as the instrument of choice. Okay. And to that we will take the last as candle instrument. So the default instrument should match the candle instrument, and candle instrument should match the instrument of choice, which is USD JPY. Okay, so here one more time we have to take the instrument. Okay, so we got this. Here the position amount needs to be added. All position equals to 0. So there should not be any open or pending order on the account, and after that we will add this indicator blocks. We will find the indicator just below each VF block. As I said, we are going to need 4 of this, and we have to define it accordingly. This will be changed to 4 hours. This will be changed to 15 minutes. And then we have to pay attention to the look back period. Here it will remain 0, so the current output value of the Keltner channel will be taken into consideration, and that value will be compared to the value a day back. So here I have to change the shift value to 6, and in case of 15 minutes we will be considering, no, this is fine, shift value of 1. So last 15 minutes output value for Keltner channel will be compared to the value with time interval of 1 hour. So we have to take 5. So there will be interval of 4 blocks of 15 minutes each between these two Keltner channel output values. And to consider the price action, we are also going to rely on the get historical candle. For that, we are going to need the info block, get historical candle. Input value, this will be changed to 15 minutes, and it will have the shift value of 1. We are going to compare its closing value to these bands of last 15-minute Keltner channel output. And after that, we will need the 10-second blocks to define the execution point. So I will change this to 10 seconds and the shift value of 1, and one more with the shift value of 2. So this will be changed to 10 seconds. The shift value will become 2. Okay. So with this, we have these basic building blocks ready for our algorithm. And with it, we will stop for the day. I hope you have been able to understand the logical part as well as the indicator block addition to get the setup ready. So these are the minimum required blocks using the indicator and the get historical candle blocks to look at the price volatility. Now in next session, we will be completing the conditions for the execution of the buy trade, and in subsequent session, we will look to define the sell side of the equation. So that's it for the day. For further coverage of the market developments, you can check out the Dukascopy Analytics page. Whenever you want to start trading, the JForex platform offers a world-class experience to trade in the financial markets. We are also available on the Facebook. You can reach out to us there. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.